Hello and welcome back to the channel. Today we're providing our final intraday market analysis for this week, specifically for March 7th, 2025, covering our usual four key markets: Ethereum, the DXY, US oil, and the US30. As always, we'll be integrating our fundamental perspectives with the mass pressure timing data to construct a potential trading roadmap for your intraday activity. Let's commence right away with Ethereum. Our fundamental outlook, which remains slightly bullish as carried forward from earlier in the week, continues to hold. Turning our attention to the mass pressure chart specifically for Friday, March 7th, 2025, we observe continued high mass pressure levels for Ethereum. Indeed, Friday's mass pressure data generally registers even higher values than the already elevated levels we analyzed on Thursday, suggesting a potential intensification of market activity. Consistent with previous sessions this week, Friday's mass pressure is characterized by significant volatility and a wide range of intraday fluctuations. While these erratic movements persist, we can note a potential subtle shift towards a slightly downward tendency emerging in the afternoon and evening trading hours. Despite this possible late-day drift, the consistently high mass pressure readings overall on Friday still point to a market exhibiting strong underlying interest and active trading. For your intraday strategy on Friday, traders should maintain heightened awareness of the persistent high volatility and remain prepared for potentially rapid price swings, accommodating both bullish and bearish intraday movements. While the subtle late-day downward drift in mass pressure warrants consideration, the dominant characteristics remain high activity and volatility, suggesting continued opportunities for nimble intraday trading approaches, always coupled with robust and diligent risk management protocol qualifies. Next, let's proceed to analyze the DXY, the US dollar index. Our fundamental perspective for the dollar index continues to be neutral to slightly dollar weak. When we examine the Friday, March 7th, 2025 mass pressure specifically for the DXY, we observe a continuation of the higher scale established on Thursday, with values consistently remaining in the 65 range. However, the defining characteristic of Friday's DXY mass pressure is its extraordinarily compressed volatility, even more pronounced than Thursday, and an almost perfectly flat profile. The data presents as virtually a straight line throughout the entire trading day, exhibiting no discernible trend whatsoever. This utterly flat and ultra-low volatility mass pressure reading provides an even stronger confirmation of our neutral fundamental outlook for the dollar index. It overwhelmingly suggests a market in complete equilibrium, indicating an exceptionally high probability of purely range-bound and exceptionally quiet trading for the DXY intraday on Friday. Intraday trading opportunities will likely be limited to the most conservative, ultra-short-term range trading strategies, given the unprecedented absence of directional signals and volatility in the mass pressure data for the dollar index on Friday. Prudent traders may even consider minimal DXY intraday engagement given these highly constrained conditions. Now, moving on to US oil, we are still maintaining a generally balanced and neutral fundamental outlook for crude oil for March 7th. Analyzing the mass pressure data for Friday, March 7th, 2025 in US oil, we observe a remarkable consistency with Thursday's data, but with even more extreme characteristics. The US oil mass pressure values for Friday are virtually indistinguishable from Thursday's, remaining within the same exceptionally narrow range. However, Friday's data exhibits even more compressed volatility, reaching an almost static state. The mass pressure profile is perfectly flat across the entire intraday session, displaying no discernible trend whatsoever. This utterly flat and ultra-low volatility mass pressure reading provides an unambiguous and exceptionally strong confirmation of our neutral fundamental outlook and the projection of range-bound trading. It overwhelmingly indicates an extraordinarily high probability of purely range-bound and exceptionally quiet trading for US oil intraday on Friday, potentially even more so than anticipated for Thursday. Intraday trading opportunities will likely be exceedingly scarce and limited to the most ultra-conservative, scalping-focused range trading strategies. Given these unprecedentedly muted mass pressure signals, prudent traders may seriously consider minimal to no intraday engagement with US oil on Friday and instead focus their attention and capital on potentially more dynamically active markets. Lastly, let's examine the US30, the Dow Jones Industrial Average. We are carrying forward our assumed cautiously optimistic fundamental backdrop for equities for March 7th. Turning to the mass pressure data for Friday, March 7th, 2025, specifically for the US30, we see a starkly contrasting profile compared to both the DXY and UsOil, and even exhibiting an intensification of the pattern observed on Thursday. The mass pressure for the US30 on Friday is characterized by even higher volatility and an expanded range of values, fluctuating even more erratically and rapidly throughout the session. Unlike the flatter mass pressure profiles of the DXY and UsOil, and even surpassing the already volatile readings of Thursday, the US30 data on Friday displays a completely trendless and chaotic pattern of intraday movement. This exceptionally high volatility and erratically fluctuating mass pressure reading for the US30 on Friday overwhelmingly suggests a market experiencing extreme intraday indecision and intensely active, chaotic, two-sided trading. While cautiously optimistic fundamentals may contribute to the very high overall levels of mass pressure activity and volatility, the amplified lack of directional trend and increased erratic fluctuations in the mass pressure data point to an exceptionally unpredictable and extremely choppy intraday trading environment for the US30 on Friday. Traders must be prepared for extremely rapid and potentially violent price swings and reversals. Intraday strategies must be exceptionally nimble, highly adaptable to extreme volatility, and focused on very short-term execution. Robust risk management, significantly reduced position sizes, and potentially a highly selective approach to trading signals are absolutely critical in such chaotic market conditions. Given this exceptionally unpredictable and volatile mass pressure profile, prudent traders may consider significantly reduced exposure or even sideline intraday trading of the US30 entirely on Friday and instead direct their focus and capital towards potentially more fundamentally or technically clearer market opportunities elsewhere. Remember, market analysis is inherently probabilistic, not deterministic. Prices might not always move precisely in accordance with our fundamental views or mass pressure timing projections. Should price action invert or move counter to our initial analysis, it is crucial not to disregard the mass pressure periodicity entirely. These periodic timings can still prove to be highly valuable and adaptive. Consider utilizing them as potential entry points when you observe clear price reversals. For example, confirm double or triple tops and bottoms, or for tactical entries during established trend continuations, such as pullbacks, particularly once a definitive trend shift is validated based on your individual trading perspective, methodology, and chosen confirmation tools. In final conclusion, our integrated approach of combining fundamental understanding with mass pressure timing is designed to offer a comprehensive and nuanced intraday market perspective. This multifaceted analysis provides potential insights into prevailing daily market tendencies and key timing points for potential trading engagements. As always, remember the paramount importance of continuous adaptation to real-time price action and the absolute necessity of rigorously applying sound and comprehensive risk management principles in all your trading endeavors. If you have found this detailed intraday market analysis valuable and insightful, we encourage you to show your support by giving us a thumbs up and hitting the like button. Please consider sharing this video with fellow traders who you believe might also benefit from this analysis, and we warmly invite you to leave your comments, questions, and feedback in the section below. We highly value your engagement and community participation. And most importantly, to ensure you don't miss any of our future market insights and analyses, please don't forget to subscribe to the channel and activate the notification bell for timely updates. Thank you very much for watching, and we extend our best wishes for your continued success and informed trading throughout your market engagements.